Hey guys, so a difficult week to say the least in the markets this week in terms of the bond market and the interest rates with mortgage rates. They've been creeping up every single day, and the Feds released their minutes from their meetings, and everybody's kind of piercing away at their talking about raising their Fed fund rates and all that. Without me going into all that detail, I just wanted to address the big picture here because I'm just reminded of the fact that we were all taught that if it's too good to be true, it's probably not true. And what do I mean by that in terms of the economy? Well, I was traveling yesterday and had the opportunity on one of my flights. I was watching CNBC and they were debating each other how good and how strong the economy is. And the moderator kept saying, "Hey, I'm not sure. What about inflation? What about this? What about that?" And Jim Cramer kept just saying, "Oh, it's strong. It's robust. Buy stocks. Buy stocks. Buy stocks." And it's good for ratings. It's good for Jim Cramer, perhaps. But if you actually follow Jim Cramer, and I love Jim Cramer, he's very entertaining, by the way. But if you follow his stock tips, you often will probably lose money, by the way. Those talking heads are there to get ratings. And it's all about propping up hyperbole. And if you look at the stock market, you look at the equity market, it's had an unprecedented run. And it's going to eventually run out of gas. It always does. There's always a pullback. Now, am I saying to go out there and short stocks or buy puts on the option market? I'm not necessarily saying that, although between you and I don't think that's a bad move right now. I think that the market has moved up and up and up, and it's moved up on, I think, shallow news. You think about the job market and how the job market has shown some really good numbers, but we have to be asking questions like, are these numbers propped up on part-time work? Or are these returning jobs from the pandemic and layoffs and all that we're still seeing the effects of? Lots of things. Obviously, inflation was exacerbated by the pandemic and by all the free money that was given. But the Fed funds raising their rates over a year ago, we're already beginning to see year over year our PCE numbers, all those things that we get on a monthly basis. We're seeing the fundamentals take effect. It just takes time. You can't do this overnight. So our bond market is testing all-time highs in the last couple of months. Now, I heard someone say yesterday, rates may be getting close to like 3 decades. It hasn't been this high in 2 or 3 decades. That's not true. It's actually been just a couple of months before where we've been right now. Now, obviously, if we continue to test these highs and get a little further, that may be the truth. But here's what we got to focus on. We got to, again, stop listening to the noise and focus on the fact that the writing's on the wall. The 10 and 2-year Treasury yields are inverted. They've been inverted quite significantly, and they've been inverted for a long time. And every single time, mortgage rates always come back. They always drop after that. All the other numbers, all the fundamentals that we pay attention to without paying attention to the headlines, if you look at the details, there is a recession looming. It doesn't feel that way because consumers are still spending. But consumers also have at an all-time high credit card debt right now. So when you factor all these things in here, it just doesn't feel like it's, a booming economy. I mean, the economy is okay. In the United States, we're a lot better off than many other countries. But just look at the writing on the wall. There's going to be a pullback. We get into the first of the year, and the buyers are entering the market right now. We're getting more first-time home buyers that are entering into the market more than ever before. And then you get the fact that rates start creeping down next year, that's going to exacerbate that. And so with inventory as low as it is, supply and demand, just look at the basics. And you know that the wave is coming. So we got to be prepared for that. We got to understand. So let's leverage each other. Let's help each other educate the consumers, tell them to stop watching TV basically, and pay attention to the real estate agents, pay attention to the mortgage professionals. Let us help our clients and those that are looking to buy houses, people that are looking to sell and move. Let us get together and let's help each other out, how we can help leverage each other in terms of educating the consumers. You guys have a great weekend. Hope you have a good one. Give me a call if I can help in any way.